Yo, what's happening, ladies and gentlemen? So tonight's video is going to be focusing on why this week it's going to be a busy one. And we are going to see some big bad boy moves in the charts, guys. And what I'm going to aim to do is try and help you understand what's going to trigger these moves that we are due to see in assets across the board. So let's dive into a little bit of Bitcoin and then make sense of where we can expect Bitcoin to end up. Because remember, I've said it before, guys. Bitcoin is always going to move afterwards, all right? We know what the game is. We know that big money banks, hedge funds, institutional traders, we know that they like to stick to the legacy assets. Now we're talking Forex, commodities, and stocks, all right? And then they take money in and out of government bonds, and then we're seeing that impact on yields and what have you. So ultimately, we're going to be making sense tonight of what we can expect going into the start of next week, and also consider how likely or where Bitcoin is likely to end up by the end of next week. Now, that's not me saying Bitcoin's going to be at 26,000 or 30,000. Happy days. But what I'm going to aim to do is try and help you understand how likely a scenario is going to play out if we do get favorable outcomes. Because guys, if you don't see the game of trading in terms of probabilities, then you are emotional. And tell me, when was there an emotional trader that ripped the market apart? It doesn't exist, ladies and gentlemen. There is no one that is emotional that kills it in the markets, because they won't be making rational decisions. They will be irrational. Okay? So let's roll with it, ladies and gentlemen. What's Bitcoin been up to lately? So the weekend has seen some interesting price action. So let's roll over into the 1 hour time frame. And you can see Bitcoin is actually trying to hold around the 200 and then the 800 EMA. We've got the psychological ranges currently forming. It's pretty tight psychological range, no different to last week's psychological range. So if we look at last week's range right here, you can see that we have got Bitcoin in around the about $400 mark. And then we've got this week's psychological range, which is the psychological high up here. And then we've got the psychological low all the way down here. So this is about 569. Now listen, the shorter the range, the more likely we're going to see the market actually initiate an aggressive move, because the actual zone of consolidation is compressed. It's in a small range. So we know that market makers like to build their spreads inside of these areas, and they are building positions, which is why if you go back in all the psychological ranges and mark them off in the charts, you will see that there will be vector candles which are quite notable inside of these zones. So if you just look at the volume bars down below, we bring this up for you, you can see that you've got this cluster right here. Look at these volume bars down here, and this was obviously beforehand as well. So you've got this cluster right here, and then you've also got this week's cluster, which you can see starting off right there. You've got vector candles coming up beforehand, and you've got this green vector candle. And you go into the other time frames, you're going to see more vector candles as well. Go back in the charts from the previous week, you can see you've got vector candles inside of this zone right here, and you can see there's volume coming inside of these points. So this zone is where Mr. Market Maker does his business, guys. All right, he sets the price up. So in other words, he was building shorts inside of this zone, and we could see that from the 3 hits to the high. You got one hit there, rejection of the 200. You had a second hit right there, and then you had the final stop hunt rise. They came up into the previous zone, recovered some of the vector candle in this range right here, and then they reversed price and continued the narrative for the rest of the week. Now listen, we've had sort of a little bit of good news coming out, okay? The Fed's talking about maybe a 10% chance of it being a 100 base point interest rate increase. Now they're coming with the idea that they only feel 75 is relevant. Okay. Now the market is anticipating this, and this is what the crazy thing is. They're talking about 100, and they're also saying about 75. You've got Yellen saying that I'm not seeing evidence of a US recession now. So what was the cause of this big drop in the S&P, ladies and gentlemen? Where is it? Here we go. The S&P. Why has the S&P been dropping down? It's gone to the 15-hour chart. Why has the S&P been dropping? Has that been the massive impact of the Ukrainian war? Well, let's just understand something. Wheat futures have taken a nosedive to the downside on the idea that Ukraine and Russia have striked a deal. How's that going to be favored across the board? Well, let's just look at the wheat futures right now. When you're searching for wheat futures, ladies and gentlemen, you want to see the continuous contract, okay? So we go to wheat futures. Here we are. Select this and go for the continuous current, all right? Now, of course, the market is closed, but wheat has actually taken a nosedive to the downside. Now it's $755, and you can see that we would ideally want to see it go down even lower. If we go back to pre-war levels is where it actually started to make a move up. Okay, this was the zone around about December time when the war had been declared on Ukraine, or the speculation of it. Then you see wheat make a massive move to the upside. Why is wheat relevant? I'll tell you now. The reason wheat is so important is because Ukraine has large fields that they can produce wheat from. And if they're going to have problems now with Russians going in and invading these plots of land, it's going to have an effect on supply. So the wheat futures have now factored that in. They factored in the idea that if there's now going to be a peace deal and they're going to stop this fighting, then we're likely to see wheat come down. That alleviates pressure on commodities. That alleviates the idea that we may not be going into the idea of food shortages, even though this has been a topic that has been discussed, but not really televised. Going over to oil, you can see bright as day that oil has been taking a nosedive to the downside. This is good news. Because all the indications that have come out since last week, talking about the CPI and 9.1%, inflation is so high right now. Well, that indication, that reading of the CPI did not factor in oil's drop. Now, let's start putting two and two together, ladies and gentlemen. They know that the CPI data itself was lagging. It wasn't a true representation of where we were with inflation because it didn't factor the idea of oil dropping down. So then we go to the idea of Yellen saying, I'm not seeing evidence of a US recession now. Then we've got the idea of the Fed maybe not going to increase interest rates by 100 base points and maybe sticking to 75. Is that their way of saying, maybe inflation may have peaked out? How are traders across the board going to understand this? Well, look at what news is coming out this week, ladies and gentlemen. Now, we've been waiting for this for a while now. I've been talking about this for the past 2 weeks. 27th of July, ladies and gentlemen. That's when the FOMC statement comes out, federal funds rate, and the FOMC press conference. You can bet on the house, ladies and gentlemen, that we are going to see some mad movements in the charts. And I'm going to say it to you now so you get it in your minds. Do not consider trading during 7 p.m. UK time and 7:30 p.m. UK time. If you want to lose money, trade during that time. If you want to give back any of your gains, you trade during the most volatile, uncertain time in the market. The Fed only has to say one thing to send the markets up and retract on that, and it goes down. You've got to understand, the algorithms that the market makers operate are programmed to understand keywords. That's why whenever you see news announcements that come out, whether it's CPI readings, unemployment claims, the algorithm can pick up the sentiment in terms of keywords, all right? And then they will factor that in within split seconds. Have you asked yourself, why does price move so aggressively? Because an influx of orders comes in beforehand. Because the algorithms themselves pick up this information. Now, we're on a need-to-know basis, ladies and gentlemen. Let's get down with the truth here. We will never know exactly at the right time when the data comes out. But what you've got to be aware of is, trading during these key times is the worst thing you can do. Now, there are guys that have made a living trading during these key times, but they have sat through hundreds and hundreds of FOMC statements, and they understand how to apply their system. For the new guy coming into trading, for the new guy who is applying the hybrid system, use these times to visualize and witness how the market maker traps the trader. Whenever we have these sort of scenarios playing out, ladies and gentlemen, I always wait until at least half an hour until the market has received the information and they've got to the idea of what happens. Here's an exercise for you. Go back in the charts or go to forexfactory.com and pull up the FOMC statement, or pull up the FOMC, Go to the federal funds rate and go back in all of these dates and mark them off on the chart and look what price does. Then you'll understand yourself and you'll say, hold on a second. Why don't I just wait until the news comes out? Because I'm finding that every time something happens with the federal funds rate, whenever they release something about it, whether they increase it or decrease it, price does something afterwards. So why are you going to put your capital at risk with the idea of it going up and down within split seconds, you getting shaken out, maybe getting liquidated, when you wait for the news to come out and then you'll start to see the move playing out? Because they would exhaust So many orders inside of this time, ladies and gentlemen. And that's not even including other orders that are coming out beforehand. Tomorrow we've got the consumer confidence, Tuesday we have the consumer confidence coming out for the US. That's already at 96, and that's what they're projecting for. And reason why traders care about this is because it's financial confidence, a leading indicator of consumer spending, which accounts for a majority of overall economic activity. Now, let's understand this. If the Fed is saying that they may not go for 100 base points increase on the interest rates, and they may be looking at 75, all right? Does that mean that the pressure of interest rates going up is going to be not so? It's going to be welcomed by the consumer because he now knows that he hasn't got to pay more on any loans, mortgages, any businesses that they have, and they don't have to worry about paying more back, because that's the problem with interest rates. And it all stems from interest rates, ladies and gentlemen. So when you've got this information, you're able to make an informed decision. Now, if you're a scalper, it doesn't matter. But as a scalper, you will always have to stick to the understanding of what the overall theme is, okay? So from now until Wednesday, when the news comes out, and this is a very important news announcement, the markets might be a little bit stable. Or the markets might slowly creep upwards. We can see that's happening right now with Bitcoin, ladies and gentlemen, okay? Now, when the news actually hits the markets in regards to the idea that Russia and Ukraine may have come to a deal, okay, we may see Bitcoin moving up. We may see the Nasdaq moving up. Let's go and have a look at other assets. For example, the dollar index. This is obviously fed from this week's close on Friday. So we're waiting for an update tonight, which will happen around about 10 p.m. UK time GMT. Okay. Now, will the dollar index drop lower? Will the strength of the dollar actually come down based on tensions over Russia and Ukraine starting to fare off? Will dollar yen slow down? Will they start taking their money out? Or will we see them come back up into the recovery of this vector? Because until the Bank of Japan does something, dollar yen's just going to keep on moving up. Euro USD. You can see Euro USD is forming a structure. And already it's got a mad amount of news announcements that are due to come out this week. It's a busy week for news announcements, guys. I'm telling you, man, you want to be really careful. Make sure you're not in trades that could get shaken out. If you are in trades and your price and your entry point is far away and you haven't got to worry about it, just still pay attention. Thursday, we've got the advanced gross domestic product quarter on quarter, okay? And we have the price index after that as well. We have the unemployment claims. Now, the idea of stagflation is present, ladies and gentlemen. Economic growth is slowing down. Inflation is high. Unemployment is high. So we're going to now understand if we are in stagflation. If Yellen's talking about that they don't see a US recession happening now, well, last time Yellen said something, she said that they were maybe wrong about inflation. So what do we believe? What do we know? All we know is they can either increase the interest rates or decrease them and print money. How long's that game going to last for? How's that going to help you in your trading, ladies and gentlemen? Simple. Every time they release key data, price does something. So your homework for tonight, ladies and gentlemen, go and take high readings. Write this. Look, high impact news. Mark it off every time they release this data, and it's each month. Look at what price does as a result of that. You can build a strategy behind that. You can say once the news comes out, you see volatile price action, okay? And let's just do it for the sake of demonstration right now. Let's just pull up the federal funds rate, okay? So last time we had the conversation was June the 15th. Let's just take Bitcoin on June the 15th. What happened on June the 15th? Okay, so that will take us to that point. June the 15th was here. And what did Bitcoin do? On June the 15th, it dropped down to the lows right here. But then up until this current point, it's actually moved back up. Okay, cool. Let's just go back again. When was the last time? May the 4th. Be with you. Let's go over to May. What happened then? May the 4th. They initiate a stop hunt rise on the 4th of May, 1 o'clock in the morning, stop hunt rise. And then we had the news announcements come out, bang, and it goes in and then it drops all the way back down again. Okay, cool. So you see the impact there. Go back again, March the 16th. All right, then let's go March 16th. What happened then? March the 16th takes us to this point right here. And then you see Federal funds rate come out. They kept things the same, did they? Yep, everything was low. Happy days. Look what happened. Price moves up. So go and do this exercise. Go and check it out. The more times you go back in the chart, all right, the more you're going to be able to put two and two together. You're going to say to yourself, okay, if I look at this, what were the rates? They've kept them the same. So go and look at price and see what it does. If you see that from September the 16th, 2020, you see Bitcoin and it moves up even when the rates come out, cool. Same again, November the 5th. You see the rates come out, cool, it moves up. December, it moves up. January, it moves up or moves down. And what you're able to do then, ladies and gentlemen, is you're able to then put two and two together and assume the point as when things started to turn. So when they're keeping interest rates tight and not doing anything about it, all right, you'll see that traders are going to forecast that in the charts, which is why they're talking already about the idea that the S&P has fully priced in the idea of a recession. We're nearly back to 4,000, ladies and gentlemen. That's important for the S&P, holding at the 800 EMA. You can see that we've fully converted these gaps in the chart. We've spoken about these gaps, ladies and gentlemen. We've marked them off. Go and watch the previous streams. There is no surprise that they've come back into these gaps. This is what the market does. It's the reason that they are given to move price towards these zones, ladies and gentlemen. Now, if the S&P continues with its move up, ladies and gentlemen, a break above 4,170, we would then likely come back up in towards the 4,500 mark. The only thing that could move the S&P towards that zone, ladies and gentlemen, is the federal news. When the Feds increase the interest rates. Because whenever there is interest rate increase, it's like the markets reset. The mechanism of the markets moving money around resets and they start again. That's what the impact is of the interest rates. And you can factor certain price movements where you can take advantage of it if you're aligned with understanding what's going on. So going back into Bitcoin, structurally, so with completely pushing away the idea of any news announcements, what is Bitcoin doing? Bitcoin is forming this nice W structure right here with the rise, now the anticipated retrace and anticipating the continuation up towards the upside. We do have this previous red vector candle that we are waiting Bitcoin to come back in towards, okay? This is what we're waiting for Bitcoin to do. If Bitcoin can get above back into this point, happy days. It's the federal funds rate that's going to allow Bitcoin to do that. So this week, probably at the start of this week, we may get the party started with the news announcements on Tuesday, where consumer confidence comes in lower. Let's assume that it does come in lower, all right? What will that impact? Well, that will show that the dollar index will likely go down lower. That will show that dollar yen may initiate a bit more profit taking. But remember what they did last week, ladies and gentlemen, with the dollar index. News that was negative came out. They initiated a stop hunt low and then they came straight back into it. Let's just go to the chart right now and have a look. Here it is. This is what you got to be careful of during news announcements. This chaotic behavior right here. Make sure you change dollar index to capital.com because it presents the vectors. Look, this is what we saw last week. This. News was bad? Cool. Get rid of dollar index, start putting it into other assets. The vector candles are giving us a clue that something else was happening. Blue vector candle holds the range, a strong close at the bottom, strong open at the bottom. Then what happens? Stop hunt rise back up again for them to continue with the narrative to move back down. So in the end, the negative news came into play. So two mindsets were triggered. Guys who were already in the dollar index itself wanting to take some profits initiated the profit taking on the bad news of the dollar, but then the same narrative of the dollar dominance came back into play, ladies and gentlemen, and forced price back up again for it to only come back down again. Market maker made them pay twice. Okay? Rolling into Euro USD at that time, ladies and gentlemen, they did exactly the same thing to Euro USD. The violet vector candle recovery, yippee-ki-yay, they sure did it. They came back into that violet vector, left some on the table. Now we've got this red vector candle right here, which we would anticipate a move back up. We would want to see a move back up in Euro USD, which would mean that the Euro USD makes up 56% of the dollar index. So that would mean that the dollar is going to start going down. Gold is starting to make its way back up as well, containing its loss and this nice big move up. When news comes out for the dollar, gold will react. It will go up if it's favorable. If it's not favorable for the dollar, gold will go up. If it's favorable for the dollar, gold will go down. Yeah? Look, this is what happened when the news came out last week for the dollar. Gold shoots up, but then it started to come back down again. Now they've held it in the zone. That's a good sign. Okay? So moving forward from that, ladies and gentlemen, what you've got to be aware of, guys, is Bitcoin, as much as look, I'm always down for Bitcoin to go up, ladies and gentlemen. Okay? This behavior right here with Bitcoin is controlled, it's consolidated, but we are going into news announcements next week, which the markets may be trading sideways for a little bit. So it may be a bit of a scalper's haven. What you're looking for with a scalping haven is you're looking for price to be in a range. And whenever you see a vector candle appearing, it's probably likely to be recovered. That's how you know you're in a vector. That's how you know you're in a scalping zone. When you see big vector candles to the upside and then you see them come back into those zones straight away. Just look at this green vector here. What's going on with my speech tonight, man? Price moves up and then it comes all the way back into it again. Then it finalizes the range, tests the daily open, recovers the green vector candle in this zone. Green vector candle comes up, pulls back ever so slightly, another hit to the upside, comes back, drops lower, recovers that green vector candle, makes its way back up again. And again, the red vector candle. Look at how controlled it is. They stay within the vector. You can exploit these on smaller time frames if you are scalping, but be very cautious with it. Okay? Let's have a look at the capital across the board. Where is the money sat? So if we just go over to Binance itself and look at Bitcoin over the last 12 hours, you can see bright as day. Let's wait for this. You can see that there is still liquidity, and they come up into this zone right here, where they hit $406 million worth of short liquidations in this zone. And we're not really seeing that much liquidity up here. And if we take it to the 7-day chart itself on Binance, it's going to give us a different story of how heavy these liquidation points are in terms of stops for the short sellers. Here we go. So up here, ladies and gentlemen, we have a beautiful $4 billion worth of short liquidations. These guys that went short from inside this zone have not paid themselves, man. Why are you leaving your money on the table for Mr. Market Maker to only come back for it? Yes, we got all this liquidity right here, but things seem to be a little bit optimistic across the board, especially if this news with Russia and Ukraine striking the deal is welcomed. If it's not just a hype in the media and nothing is set in stone, okay, then the markets will go back to doing what they normally do. But if it is true, then we are going to see price react to that good news. There's no reasons to why they won't come back and eat that liquidity right there. If it comes back to that liquidity, cool. If you've managed to exploit it in the long, happy days. But if they hit this point, it doesn't mean that Bitcoin's going to then shoot to the moon. No. Your goal is to exploit certain positions in the chart where you think, in terms of probability, by taking into consideration what is going on across the board. People are thinking, yeah, but why don't they come back down towards this liquidity? There's obviously more down here than there is up here. There's a lot of liquidity in one zone up here. All right? Now, there's more liquidity down here, but it's dispersed between a range. So you've got this area here at 21,900, and you go all the way down to here, and it's that 20,100. Now, think of it like this. If you run a shop, you have your own store, okay? And you sell jumpers, green ones for the matter. Now, imagine you have 2,000 people queuing up, trying to get into your shop. You've got the supply. You can actually fulfill the demand. All right? You're making money, bro. Are you going to go to your door and close it knowing that there's still around 2,000 people trying to come in and buy from you? No, you're not. You're going to take as much of it as you can, which helps you understand as to why they may not go to one zone of liquidity, even though it looks like it wants to go down towards this zone. The reason why they could still move higher is because there's now interest by a lot of people to come in and pick up Bitcoin. So Mr. Market Maker knows that he can build his shorts. He knows that he can get shorts filled at higher prices because he's got the commitment of traders coming in. He's got them. Look, here. here. He's got their commitment. He's not going to shut the doors on the retail trader coming in saying, yo, I want to pick up some Bitcoin. I want to use futures. I want to use leverage. I want to borrow money from the exchanges. I want you to fill my order so that when I multiply my account by 200-300%, I'm going to be up here thinking that I'm a top trader. I'm the G. I'm planning out on what I'm going to buy for my missus, or I'm going to go take people out. I'm going to clear off everyone's mortgages because you made a 300% gain in the chart. Mr. Market Maker gives you that dream. He gives you that desire. He fulfills that expectation for you. Yet the sad truth is, people don't pay themselves, because that's evident with $4 billion worth of liquidations right at 24,350. And the sad truth is they're going to eat that at some point. The when is the $1 million question, ladies and gentlemen. Is it going to be now? Are they going to do it today? Are they going to do it tomorrow? Is it going to happen during FOMC? What's the story? Don't be that retail trader, ladies and gentlemen. You come to the game of trading, you come because you want to understand the science of why price moves up and down. The end result is money, because that's the only thing that can happen. You buy a coffee, you pay for it, you get the coffee. You go and pay for a service, you give them the cash, they give you the service. Okay? Why is it that we go through life with the expectations every time we exchange something? Whether it's a service, whether it is cash, all right, we expect something in return. The market is exactly the same. If you execute correctly, the expectation is that you're making money. So don't focus on making money whilst making money at the same time, ladies and gentlemen. If you are new to the channel, mad love and respect for passing through. Make your way over to tradersreality.com, where you can download these indicators. And if you want further understanding of the hybrid system, make your way over to the Patreon. But be careful, because we are coming towards the end of the Patreon month, which means that you'll be charged twice if you join before the start of a new month. Mad love and respect to you all, ladies and gentlemen. And I'll be checking in with you all tomorrow to bring in the start of the new week. Take care of yourselves, family. Peace.